Greetings everyone, my name is Brian D'Amico and I'm the Manager of Educational Services here at VectorVest. It's my pleasure to present your Strategy of the Week today for Friday, the 5th of April, 2013, titled 10 Tips to Maximize Profits and Minimize Losses. Over the years, our founder, Dr. Bart DeLito, has provided guidance on how to protect our hard-earned profits. In fact, we highlighted his guidance several times in our Strategy of the Week presentations, both in VectorVest Australia and in VectorVest US. Here you can see a list of some of the recent Strategy of the Week presentations we've delivered that demonstrated Dr. DeLito's guidance. I recommend going back and watching some of those videos. Tonight, I'll use that guidance and other lessons taught by VectorVest over the years to provide you with 10 tips to maximize profits and minimize losses. The first thing we need to discuss is why are we choosing now to cover this topic? To answer that, let's head into VectorVest 7. Here we're looking at our market timing graph, and it shows that from mid-November all the way through to mid-March, the market had a very strong uptrend. During that time, you probably made some nice gains in your shares. Now, over the last month, the market has dropped, and you might still be holding on to some shares that you once had a profit in, but are now at a loss. If that is the case, you might be thinking it's a little late to be teaching you how to maximize your gains and minimize your losses. If that is a concern, I have a couple of comments. First, it's never too late to learn ways to improve your trading. I assume many of you plan on trading for many years to come. That being the case, do you think this is the last time the market will have a strong rally and then a sell-off? Well, it wasn't the first. If I slide this back, look back here. And what about back here? Since it's happened before, it'll happen again, and you need to be prepared. The second comment I have is, if you have existing positions still in your portfolio, you need to have a plan to know when to sell them. Existing losses can turn into bigger losses. Existing gains can evaporate if you're not prepared. Well, let me slide this back to the current time, and back on February 1st, I presented a Strategy of the Week where I demonstrated the power of the VectorVest watch list and showed you how to put your stocks into a watch list. In that presentation, I assumed that we purchased those shares on the confirmed up call that VectorVest signaled on the 19th of December, which you can see here. So let's start there. So let's go to the watch list. So I'll click Viewers, and here's that watch list that I created back on February 1st. Now you can see a lot of familiar names in here, Woolworths, Wesfarmers, and so on. Perhaps you might even have some of these shares currently in your portfolio. Let's do a couple of quick tests here. Remember, we assumed that we purchased these shares on the day VectorVest issued a confirmed up call. So let's see how these shares performed from the confirmed up call until the 1st of February when I first introduced this one. So I'll come over to Quick Test. And let's just change the dates here. We'll go from December to February 1st. And let's just run this test. Here we can see that on average, our portfolio was up 4.25%. Let's now do another quick test and see how these stocks have performed since. So I'll just do another quick test and just start this one back on the confirmed up call and run that test. Let's just put these side by side here. Now we see some interesting things. A few shares, such as BHP, Rio, and Newcrest, all went from gains to now showing losses. Additionally, we can see that Perseus went from a loss to an even bigger loss. So let's begin with those shares and see how we could have maximized gains and or minimized our losses. So I'll just right click and view a stock graph of them. And let's start by looking at Perseus Mining. That was that loser that turned into a bigger loser. Here we can see the default graph of VectorVest shows the stock's price. We also show a 40-day moving average. And at the bottom we show relative timing. Our first tip tonight is if the price crosses below the 40-day moving average, that's an excellent early warning signal. So if you notice that your stock has crossed below the 40-day moving average, that should start setting off warning bells in your head. we feel that is an excellent early warning signal. And you can see here why we feel that way. Look here, when price crosses below the 40-day moving average, that was an excellent time to get out. Over here was the same thing. And even recently, when it crossed back below, it started to move lower since then. Now for the next tip, let's look down at relative timing. And tip number 2 is, if RT crosses below 1, that tells you the stock's price is now in a downtrend. When you buy a stock, you anticipate that the price is going to move higher, right? Well, when RT falls below 1, your stock is no longer moving higher, and you need to ask yourself, why are you still holding on to it? So if we look here, we can see RT crossed below 1 back here. That would have been an excellent time to exit that position. Now the next tip is your last line of defense. And tip number 3 is, if the recommendation has turned to a sell, ignore that at your own risk. We've seen time and time again, stocks that become a sell rating typically continue to move lower, and you don't want to be on the wrong end of that. And we could see those ratings just by clicking down here where it says REC, and look at that. Perseus became a sell rating right there, and look what happened after that. Continued to move lower. And if we remember back on February 1st, when we first started looking at this, we noticed all of those things. We saw that RT was below 1, price was below the 40-day moving average, and the stock had a sell rating. And we discussed how it would be a prudent move to remove this from the portfolio. And you could see exactly why. The stock has dropped another 20% since we first looked at it. All right, well, let's look at the other 3 stocks that actually had gains but turned into losses to see if these tips that we just went through would have helped us out. So let's start with Newcrest Mining. Here we're looking at Newcrest Mining, and back on February 1st, RT was still slightly above 1, and price was above the 40-day moving average. If I move forward day by day, we could see that on February 15th, RT fell below 1, followed the next day by price falling below the 40-day moving average. If you had gotten out on either of those 2 days, it would have saved you between 15 and 20%. Well, what about Rio Tinto? Again, you could clearly see that selling when price crossed below the 40-day moving average, or when RT fell below 1, or even when it became a sell rating, either you would have closed at a gain in the case of selling when it closed below the 40-day moving average, or you would have at least minimized your losses. While we're looking at Rio, let's move on to our next 2 tips. Tip number 4 is never give back more than half your profit. Dr. DeLito has preached this guideline to us many times. You never want to give back more than half your profit. There's hardly a worse feeling in the share market than to have a gain in a share and then sell it at a loss. Now, along the same lines as that tip is the next tip. So tip number 5 is have a profit objective. You can use a profit objective in a couple of ways. First, once a stock reaches the profit objective, you could sell. You walk away happy because you made what you wanted to make. Second, if you choose not to sell when it hits your profit objective, you would refer back to tip number 4, which is to never give back more than half your profit. So once you hit your profit objective, just make sure you don't give back more than half of that. So let's apply those tips, starting here with Rio. So if we look at our confirmed up call, we can see it. Rio was at 65.71. It increased about $7 a share up to about 72, which is roughly 10%. If you were happy with a 10% gain, you could just walk away because it hit your profit objective. Or you could decide that you will not give back more than half of those profits. If that's the case, when Rio dropped $3.50 from its peak, you would sell, which coincidentally enough occurred on the same day it fell below the 40-day moving average. That just gives you extra confirmation you're making a good decision to sell. Well, those are great tips, especially for the stocks that might be at the bottom of your watch list. But what about the stocks that we looked at that had continued to increase from the 1st of February. They typically don't have an RT less than 1, and they don't typically have a sell recommendation. Let's look at some tips to help you protect your profits in those positions and maximize the gains. So let's close this graph, and here's those quick tests that we looked at. And this is what I was talking about. These stocks up here at the top, most of them we had very nice gains in the single digits up till the 1st of February. Since then, you can see many of them have continued to move higher. Let's look at how we can maximize our gains in these and protect those profits. So I'll just highlight these and let's graph them. And let's actually start by looking at ANZ. There we go. Sure looks like it had a very nice run, especially from that confirmed up call. But let me zoom in here to the, let's say the most recent 6 months or so. Now we can actually see that it started to move down recently. RT isn't below 1 yet, and if we look up here, it's not a sell rating yet. However, you'll notice one thing. Price has fallen below that 40-day moving average. So you should have those warning bells going off in your head. What else do we notice? Well, ANZ is up about 20% from that confirmed up call. So you definitely don't want to give back more than half of those gains. However, keep in mind, you've now watched it give back some of those gains already. And VectorVest has now signaled a confirmed down call. That being the case, you'll want to focus on our last tip of the night. So stay tuned for that one. Let me show you some other tips. Let's look at Westpac Banking. It also had a very nice run since that confirmed up call. Here's another tip to help maximize profits, and that's tip number 6. If price crosses below a trend line, consider selling. You can adjust trend lines up, but never adjust them lower. VectorVest gives you the ability to draw what's called an extended trend line, which I find very useful, because as the days go by, VectorVest will continue to draw the line for you. To do that, I'm going to come up here, and I'm going to choose extended line. And I'm just going to start at this low, and I'm just going to connect the lows here. And you can see how VectorVest continues to extend that line out. So once I have my initial trend line, we can see that at the beginning of February, price actually began to accelerate, and it created a higher low. That being the case, we need to adjust our trend line up. So it's very easy to do. I'll just come up here, attach it to that low, move this one to this low, and you can see how it shifted our trend line higher. Then price continued to accelerate. So let's adjust our trend line higher here and attach it to this low down here. So now when price fell below this trend line, I'll put a date line over here, you could use that as a place to exit the position and take profits off the table. One thing you never want to do is start to adjust your trend lines down and start to say, oh, well, I'll give it a little bit more room, and how about I put it down here now? No, you never want to adjust them down, but you can keep tightening them and move them up. That way you can maximize profits and protect those profits that you did gain. Now the next 3 tips involve some basic option trades. To illustrate these tips, let's take a look at CBA. So here's a share that just started to show signs of falling, but it's still above the moving average. RT is also still above 1, and it's still above a trend line if I drew one. So at this point, you might not have overwhelming evidence to sell it. However, the market is in a downtrend. So what can you do? One thing you can do is follow tip number 7. And tip number 7 is sell a covered call. When you sell a call option while owning the stock, that's referred to as selling a covered call. When you sell a call, you agree to sell your stock if it reaches an agreed upon price, called a strike price. It's also referred to as an exercise price. For example, a CBA, which is currently at $68.10, if I put on a line, let's just draw a horizontal line here, and let's say it's at, we'll just put it at 69. So if the share rises above 69, you'd be forced to sell the stock. However, keep in mind, you would have generated income from the premium that you received from the sale of the option. plus any price appreciation up to the strike price. Well, what if you wanted to protect yourself just in case the stock drops? In that case, you would use tip number 8, which is buy a put option. Buying a put option is like buying an insurance policy on your stock. A put option gives you the right to sell your stock at the strike price. Let's say you wanted to protect yourself from the stock dropping below, let's say $67.50. So let me just put another line right around there, which, as you can see, is right near where the moving average is. So that works out well. By buying the put option, you have the right to sell your share at the strike price, even if it drops all the way to zero. However, like all insurance policies, a put option will cost you money out of pocket. Now, most people don't like to pay for things. So, a terrific way to help you finance that insurance policy is using tip number 9. And tip number 9 is sell a covered call to help finance the cost of the put. This trade is called a collar, and VectorVest provides a great plug-in module called the Options Analyzer to help you understand this trade. So let's take a look at that now. So let's just minimize this graph. I'm going to close these quick tests here and just go back to CBA. And all I have to do is right click on it, go down to Analyze Options, go over to Bearish, and I'm going to choose Collar. Here we're analyzing a trade where we own 1,000 shares of CBA. However, let's say we bought it at $61.33, which was the price back on the day of the confirmed up call. So I'm just going to come over and choose Edit and change the price. I'll do $61.33 and then just click OK. Once I do that, it shows that I've actually got a profit on this trade of over $6,700. So I want to protect most of those gains. And to do that, we place this collar trade. So we did two things. We bought the put option, which gives us the right to sell the stock if it falls below the strike price. Click on Edit, and I want to change a couple of things here. Not only do I want to change the strike price, but I'm going to go out, instead of April, I'm going to do May, and I'm going to change the strike price to $67.51, which is what we looked at earlier. And we can see that the premium is going to cost us $1.09 out of pocket, and that's per share. I'm just going to click on OK. Now I also need to modify the call, so I'm going to edit that, change this out to May, and remember we're selling this call to help finance the cost of that put. And we did want the strike price to be 69, and I'm just going to click OK there. Now let's move this over just a little bit to see what happened there. Alright, so the put, which is our insurance policy all by itself, would have cost us $1,000. So if we just wanted insurance, it would have cost us $1,000. However, by selling the covered call, it more than paid for the insurance policy. So basically, we're getting paid to get insurance on a stock that we own. Now this option analyzer helps you analyze this trade. So if we look up here, we can see that if the stock's price does go up, and if it goes up past $69, and I could use these arrows over here, we can see as it goes up, the profit and loss, which is the profit here, is going up for us. But once we get up to 69, notice what happens to the profit. It's capped. It's not moving any further than 8,000. Was we made our price appreciation up to the 69, but then we have obligations to sell or deliver that position to somebody else at the $69 strike price. Now on the flip side, if the market does continue to fall and this stock does fall, we can see if the stock price falls below 67.50, as I keep lowering this and lowering this, notice we're capped here. We actually locked in gains of $6,520. So by placing this collar trade, not only did we ensure that we were able to lock in some gains, but we also gave ourselves the ability to gain some more to the upside if the stock continues to move up. If you'd like to try this options analyzer, You could do so free of charge by going to www.vectorvest.com/options, and we'll give you a free 2-week trial to it. Well, this brings us to our 10th and final tip of the night. And tip number 10 is, just sell the share. The surest way to protect your unrealized profits is to simply sell the share. You would then simply hold the cash in your account while waiting for the market to settle down. Well, to recap, tonight we looked at 10 tips to maximize profits and minimize losses. Tip number 1 was, if price crosses below the 40-day moving average, that's an excellent early warning signal. Tip number 2, if RT crosses below 1, it tells you the share's price is in a downtrend. Tip 3, if the recommendation turns to a sell, ignore that at your own risk. Tip number 4, never give back more than half your profit. Tip 5, have a profit objective. Tip 6, if price crosses below a trend line, consider selling. But remember, you can adjust trend lines up, but never adjust them lower. Tip 7, sell a covered call. Tip 8, you can buy a put option. Or tip 9, you can combine 7 and 8 to make a collar. And then we have tip 10, you could just sell the share outright. If you follow these 10 tips, you'll be well on your way to maximizing your profits and minimizing your losses. I'd like to thank you all for watching and hope you have a fantastic weekend. Good night, everybody.